Ladies and gentlemen, welcome back to the channel. Trump today caused markets to have another one of those Friday sell-offs via some tariff headlines. If you are unfamiliar with those tariff headlines, I will share them with you in this video. But here in this video, we will discuss the current state of Tesla stock. As Tesla has declined a lot recently, we do have some big upcoming catalysts next week, like CPI data and other sets of data that are going to be a big driver of our markets. Now, I do also want to say that while the market sold off a lot today, I'm not convinced that next week's tariff announcement is going to be this disaster, start to a trade war. And I'll explain why here in this video. And in fact, despite the rough treading that Tesla has really had in the past couple of weeks, hedge funds and institutions are taking this opportunity to, one, cover on some short positions, but also add to their option exposure in Tesla as well, to add some bullish option positioning. You can see today you had 154 different trades totaling $151 million with a positive order value of 74%. Yesterday, you had 550 different trades totaling $1.36 billion with a positive order value of 77%. Now, options, I really like to pay attention to the option activity because they're forward-looking positionings, right? You're not positioning in options for what happened yesterday. You're positioning for what is coming next, right? What's going to happen. And based on the option positioning in and of itself, if you looked at this, you would say, well, Tesla stock's probably going higher. Like, if you had no knowledge of what has happened to Tesla stock in recent weeks, you would say, well, Tesla's probably, or, whatever stock, right? If you didn't know the stock, just look at the option activity, you would say that stock has probably done pretty well. In fact, that has not happened for Tesla. If you look at the last week, you have seen 1,830 different option orders, totaling $2.62 billion with a positive order value of 76%. This is a pretty good indication of what could be coming next for Tesla. After all, we've had a lot of good news recently that has really just been ignored, like Tesla hiring 12 executives to really oversee mass production of the Optimus bot, which looks like it's starting anytime now. Tesla even today raised prices of the Model X by $5,000. A potential licensing deal for FSD coming with Ford soon. FSD entering the Chinese market soon. There's been a lot of good news recently, as well as, the new Model Y that's launching. Tesla stock has not reacted positively to any of this news. And I think that's, the wrong reaction to bullish news. After all, if you like Tesla in the 400s, then you should really love it at, $368 per share. And if you were someone, as Tesla stock was ripping through the 400s, that had a little bit of FOMO, I think now is a great time to take as an opportunity and add to some of those positions. Now, obviously, I'm not a financial advisor. I am not a financial planner. Come to your own conclusions, obviously, but that's my conclusion. Now, there was some headlines today. Zelensky says, let's do a deal offering Trump mineral partnership seeking security. So basically, Zelensky is going to let us mine our rare earth materials or metals from Ukraine, but they want the war to be over with. Now, Trump says we do want to work on the deficit, get it down to even. Trump says tariffs are an option to address the deficit. But the news that really whacked markets today was the news that we could see reciprocal tariffs as early as next week on many different countries. Now, the reason I would push back on this and say this may not be as bad as Canada or Mexico, because think about like South America, right? Like different countries down there, or different countries in Africa or Asia, right? As long as it's not Canada, Mexico, China, then it's really not that bad. Now, Europe could be an issue. That is obviously an area of concern. But as long as there's nothing too aggressive on Europe, I don't think anything else really matters. Tariffs on Mexico, Canada seem to be resolved for now. Not really an issue heading into next week, in my opinion. China, we already put 10% tariffs on China. I don't think we're going to be putting new tariffs on China anytime soon. Europe probably gets a 10% tariff. Is that really the end of the world? Probably not. So as markets took this news today as really bad and sold off, and Tesla and other areas sold off today, I don't think it is going to be seen, as super negative coming next week. Obviously, tariffs not exactly great in any capacity from Wall Street's perspective, but it's probably not going to be nearly as bad as what some people expect. Now, you also had Michigan consumer sentiment today that current conditions, expectations came in lower than expected across the board, but you did have a pretty shocking rise in the one-year inflation expectations. But worth mentioning, Democratic respondents to the survey had inflation expectations at a median at about 5.5%. Independents were at about 3.2%, which was actually the expectation, or roughly the expectation for the one-year inflation expectations today. And Republicans are at 0.1%. So Republicans expect almost no inflation. Democrats expect pretty much hyperinflation. And independents are like, nothing has really changed here. So I think Wall Street's probably going to look through some of that noise coming next week, would be my personal opinion. Now, next week, we have a lot of earnings, okay? Monday morning, you have Monday.com. I mean, if your company's called Monday.com, you better report on Monday. And that's what they're doing Monday morning. Tower Semiconductor and McDonald's that will be reporting Monday morning. Monday and after hours, Astra Labs, Fluence, Vertex, Acellus, MedPace, and others. Tuesday, pre-market, Shopify, Coca-Cola, Humana, BP, AutoNation, Marriott International. Tuesday and after hours, Supermicro, Upstart, DoorDash, Lyft, Freshworks, Energy Transfer, Gilead, and Zillow Group. Wednesday pre-market, Vertiv, CVS Health, Generac, Biogen, Kraft Heinz, and Ryder. And then Wednesday and after hours, you have Reddit, AppLovin. Those are both two stocks that have went gangbusters in the last couple of months. It will be very interesting to see what happens with those two names. You have Robinhood, Dutch Bros, Albemarle, The Trade Desk, Cisco, MGM Resorts, and others. Thursday, Datadog pre-market, CyberArk, John Deere, Crocs, Duke Energy, Sony, and GE Healthcare. Thursday and after hours, Coinbase, Twilio, DraftKings, Applied Materials, Airbnb, Palo Alto, Roku, Wynn, and Republic Services. And then Friday pre-market, you have Moderna, Enbridge, AMC Networks, and others. So you still do have quite a bit of earnings next week that I think can move our markets, especially their certain sectors. And it looks like a big sector theme for next week is going to be one, AI, Supermicro, Vertiv, right? But also AI software, like Datadog and potentially CyberArk, and Twilio could be grouped in that category as well. So different sectors definitely going to be hit positively or negatively with next week's earnings. Next week, starting off Monday, you will get consumer inflation expectations, and that's your bigger catalyst for Monday. On Tuesday, you will get Fed Jerome Powell that testifies in front of the Senate, Fed Bowman and Fed Williams that will also be speaking. On Wednesday, you get another day of Fed Jerome Powell's testimony, but you also get the CPI data. So core month over month is expected at 0.3%. Last month was 0.2%. Year over year expected to tick down to 3.1%. Headline month over month inflation expected at 0.3%, and year over year expected to remain steady at 2.9%. I think inflation is probably going to come in lower than expected across all of these different metrics coming next week. So don't be surprised if that actually can boost markets quite a bit. And something like Tesla that is very interest rate sensitive, well, if inflation comes down, that's going to have a huge impact on 10-year treasury yields and push those yields lower, which will likely push Tesla stock higher. On Wednesday as well, at noon, you'll get a speech from Fed Bostic, and then Fed Waller speaks at 5:05 p.m. On Thursday, you get PPI month over month expecting 0.2%. which would be a pretty good number. Initial jobless claims will be coming out as well Thursday morning, and core PPI month over month expected actually at 0.3%, which last month they came in at 0%. So that would be a big increase on a month over month basis. And then retail sales come out on Friday expecting 0% for a month over month change. Again, if you come in really bad there, then that's kind of going to bring up fears about the consumer and about people's spending habits, and not going to be a great sign for the economy if that comes in high, which, I mean, like we heard from Elf that they say trends really slowed down in January for spending behaviors. And I think that's probably happening across the board. So retail sales could actually come in a little bit light there would be my expectation. So a high number I would really say is would be shocking. So definitely going to be on the lookout for that one. Industrial production month over month, capacity utilization, manufacturing production, and business inventories will also be coming out on Friday. This will give you a new update to the Atlanta Fed GDP Now tracker. The latest estimate was 2.9% following the economic data that came out today. Now, I think specifically for Tesla, following the dramatic decline from all-time highs that we have seen, you're now down about 25% from your all-time highs. You've really de-risked, right, in Tesla. I think there's a lot less risk in Tesla at these levels than at $488 per share. Now, I'm biased. I have a $900 price target on Tesla by the end of this year. Like, that sounds crazy to a lot of people. I understand. I get it. But nothing has really changed negatively for Tesla. We've only seen things go right for Tesla in the last couple of weeks, really the last 2 months or so, but yet the stock continues to fall. And I think that's just opening up an opportunity, especially if we do fall for whatever reason next week. Probably would have to do with some of the headline news, especially if Trump is targeting a larger tariff on Europe than 10%, like 20, 25%, then that would obviously be seen as negative for markets. Wouldn't be surprised if markets fell in that scenario, and Tesla also, fall in that scenario as well. But any move lower from here, I think it's just really an opportunity. And the next level to target is that $330 level. That is your 100-day moving average. Technically around $333 per share is that 100-day moving average. That's the next shelf of volume you will also run into that we've seen around the election, post-election, when volume started to spike in Tesla. And you had a little bit of sideways trading action for about a week and a half, 2 weeks or so. You come back down to that level, right at this 100-day moving average. I think that will form a really nice base. It's not a guarantee that that is going to happen, but if it does happen, then, you really got to think about what's changed. And what has changed for Tesla? Ooh, Tesla raised prices on the Model X. Well, that's good for margins. Ooh, Tesla is hiring more employees to start mass production of Optimus. Is that really a bad thing? No. Tesla is retooling their factories to get ready for the new refreshed Model Y production. Of course, they're not delivering as many Model Ys, the older Model Ys, right? In January, that's the news we got. Germany deliveries down 60%, Finland, Norway, European countries deliveries down a lot in January. That was expected. That's not a big shock to anyone that's been following the Tesla story. Tesla doesn't go from producing one vehicle at max capacity to the next day later producing the new vehicle at max capacity. They wind down capacity of the old vehicle and then ramp up capacity of the new vehicle pretty quickly. And I would imagine Tesla probably has a couple 100,000 new orders for the Model Y. It was already reported in China that Tesla had 50,000 orders for the new Model Y, and that was a couple of weeks ago. And that was before US orders opened up or any of that. So, to sit here and say Tesla's down $120 per share from all-time highs and try to paint the picture that things are really bad, I think it would kind of be doing you guys a failure, right? I don't think anything has changed that has been super negative from all-time highs. Sure, has some of the sentiment, momentum died down? Of course. Tesla goes in waves. The next wave for Tesla, we'll send it back into the 400s. Question is, at that point, does it run into the 500s? And I don't know what that catalyst will be, but I am confident to say I think these levels are a very attractive buying opportunity and really an opportunity overall if you are bullish in Tesla. Like, if you're still as bullish as you were before, but you have a $120 discount on the stock, then, I would say that's information, perspective you could probably make a profit on. Timing, of course, is highly unknown. I'm not a financial advisor. Keep that in mind. I'm not a financial planner. Come to your own conclusions. But I am looking at Tesla right now very opportunistically because Wall Street, they do this. They get too bearish sometimes. They get too bullish other times. But ultimately, I think people right now just being too bearish is not going to last that long. So let me know what you guys think about this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.